Hi there. Tell me, will the stock price of Altria Group rebound and continues to pay a nice dividend of almost 10% a year? As you can see, they're currently paying a dividend of about 9.5%. So that's great. You can have a nice return only from their dividend. Plus, if the stock price rebounds, then you add another return to this dividend. So your total return may be more than 10%. As you can see, the market cap is around 72 billion and the PE ratio is about 9. Now, the question you should ask is if this dividend is sustainable and if the revenue and earnings will grow more in the future. Because if they do, then you will have a nice return over or almost 10% a year. That can happen. Or maybe even better, the stock price may go to $74. This can also happen if they continue to do more buybacks and find other opportunities for their growth. So, in this video, you'll find out the fair value of Altria and its future outlook. As you can see, the analysts, or better said the market, expects the revenue of Altria to be around 20 billion for the next 4 years, and their earnings and free cash flow to increase just a little, to be between 8 and 10 billion dollars. So it looks like this dividend of around 9.5% is expected to be stable. And if they continue to do some buybacks, then also the stock price may increase a little in the future. So your total return, as I said at the beginning, may be about 10% a year. If you are pleased with this return, then you can take advantage and invest in Altria. Now, if you want more, to have a higher return, to double your money in the next 5 years, to have a return over 15% a year, then you have to search for better investment ideas. That's why I'm offering my research platform, where you can find great businesses, where you have a marginal safety, and invest in them when they are low and let them compound over time. So if you are serious about investing, you can send me an email at businesslifeinvesting@gmail.com or see the link in the video description. There you find more about the way I analyze businesses, their fundamentals, their business model, segments, moat, opportunities, and risks. And at the end, their fair value. When to buy and when to sell. That's the most important. To buy low with a marginal safety and sell when the stock price is overvalued. So if you are interested, send me an email or access the link in the video description. Now, let's come back to Altria. As you've seen, the revenue and earnings are expected to grow a lot in the future. And so their dividends are expected to increase. And that's great. By 2027, you'll have a dividend of about 10.7% if you invest at the current price of $41 almost. So the market expects stable earnings and free cash flow in the future and an increase in their dividends. Now, if you look at their capital allocation, you can see that for the last 5 years, they returned more than 47 billion to shareholders, and that's great. They paid in dividends of about 6 billion, which are expected to become 7 billion. They did some buybacks, and as you can see, they are paying a year of about 8 billion to shareholders. So this is great, because you have this nice return from their dividend of almost 10%, plus they also do some buybacks, which will increase the stock price. It might go to $50. And if that happens, your return will be higher than 10% a year. So that's great. Now, you also have to look at the risk. Because as you probably know, smoking rates are declining. As you can see, the cigarette smoking rates are going down. But don't think that they will go down next year. It will take more time. Because people are really addicted to cigarettes. They can't give up so easily. So even though those rates will continue to go down, Altria will still be able to make some money. They'll increase the prices, plus they have other opportunities. For instance, vapor products, e-vapor, and their brand Enjoy. By the way, if you read more about those opportunities, you'll find out that their brand Enjoy is currently the only e-vapor manufacturer to receive market authorizations from the US Food and Drug Administration. So as you can see, they are the only provider. And this is an advantage because as smoking rates are going down, they can increase their e-vapor products to gain more market share and increase their revenue or offset that decline in the revenue from cigarettes, tobacco products. You can also see in this image that the volume from combustible or cigarettes and oral tobacco are going down. The volume is going down. But their e-vapor products are going up. They are gaining more market share. And overall, their volume seems to be stable so far. And this is a good sign. Because even though smoking rates are going down, they'll be able to make more money from e-vapor products. And the revenue may be stable for the next 5 years, and so their earnings and free cash flow. And if that happens, then you can rely on their dividend of about 10% and some buybacks, which may increase the stock price. They can go up to $50. So the outlook seems good. Of course, other bad things may happen. As I said, maybe those rates will decline even faster. And you also have to be aware of future regulations. Because some countries, for instance, the UK government, may ban cigarettes, smoking. As you can see, they're considering a complete ban on smoking for the next generation. By the way, this already happened in New Zealand for young people. So this is not something new. You might see in other countries too. That's why you have to be aware of this risk. It may happen. But as I said, people are addicted to cigarettes, and it's quite hard to give up on them. That's why different governments are trying to ban smoking for the next generation. I mean for young people. And over time, their revenue may be affected, because if you no longer have smokers, the revenue goes down. But for the next 5 years, 10 years, I don't think that decline will be quite high. It will be slow. Until then, you can get a nice return from their dividend plus some buybacks. So as I said, your return may be about 10% a year, if other issues don't arise. So, if you are pleased with this return, you can take advantage. But don't forget the risk. Now, let's see the fair value of Altria. How much you can expect from this business. As I said, if they continue to make of about 8 billion to 9 billion free cash flow, then the fair value may be around $40 per share for a 10% annual return. So the current level, this may be your return. If you are pleased with it, you can take advantage. Now, the great scenario, if their earnings improve, their free cash flow goes higher, and they also do some buybacks, then the fair value may be higher. It may be around $57 per share. This can also happen. As I said, the current price of $40, you have a dividend, 10%, plus an increase in the stock price to $57, your return may be quite nice for the next 5 years. In the normal case, the fair value may be around $50 per share. This can also happen. So, if you are pleased with this return only from their dividends, of course the stock price may go up and down, but overall your dividend will be about 9.5%, which may be increased a little next years. Now, if you want more, you can join my research platform, where I analyze great businesses that have a marginal safety. You buy low and let them compound over time. So if you have other questions, please let me know in the comments.